when it comes to the rating agencies, they've been a little bit under fire lately. Given that so many buyers look to ratings as something to consider when obviously they're looking at buying situations, what are the rating agencies, specifically S&P, doing to sort of restore their credibility, given some of the past controversies about ratings and conflicts of interests and things of that sort? What can you say that's going on at S&P to hearten the souls of people who are going to look at those ratings before they maybe make a plunge and buy some distressed assets?
Sure. It's been a tough year, as you pointed out, and it continues to be tough. Since the beginning of the year, our management has instituted 27 voluntary actions. Now, those are on our website, and the progress on those are monitored on our website, so everyone can take a look at those. And I'm not going to go through all 27, okay. so don't panic. But let me go through a few. And some of those are more able. They're more tangible. They're more woolly. For example, on RMBS there's going to be more detail with loan levels. There is an appointment, although he has not started at the firm yet, of a new ombudsman. There are mandatory analyst rotations so that there would not be any perception, either real or perceived, that they're getting too close to a client. We have a new chief credit officer that's actually going to be starting at the firm tomorrow, who's a real sort of structured type of guru. So the idea is these are not mandated by any regulatory authority, but these voluntary actions are items that managers at S&P sort of served up, based on concerns in the market that would help to bring more transparency to the ratings and also to restore some more credibility to the ratings. But in that same vein, I will also just mention once again about corporate defaults. Now, structured defaults are very different. They had sort of a very limited observation period, if you will. It was a very fast-growing market. But just to highlight corporate defaults, we have a corporate default database and transition database up and down of the past 27 years. And if you look at corporates, they in fact do work. We publish a lot of research on the performance of the ratings in the corporate universe. And so, I think that you can have a lot of comfort in that 27-year history and performance on the corporate bond side.